Good morning. This is Jeff Scott. It's Sunday, May 10th. Happy Mother's Day to all the mothers out there. And this is my weekend review. I titled today, Markets Roll While for Many Unemployment Takes Its Toll. Sort of remarkable to see the market go up on days with unemployment of 20 million people. But that's the world we live in, and we don't make the market. We just got to capture as much gains from it as we can. Disclaimer, this is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent, which means no one pays me to say anything good or bad. I pay for the tools that I use, and trading involves risk. You and you alone are solely responsible for any decisions you make. Be your own guru. Key influences on my style. Just a few notes here. I started with CanSlim, as brought by O'Neill, improved by Morales and Catcher. Also improved tons by my friend who passed away years ago, Ian Woodward. John Person really taught me how to go from a list of stocks to a trade. Cigar, man, does he got some interesting tools. Every day I learn more about them, and they become more part of my trading. If you don't know who he is, go back at my YouTube videos because he's got a great offer going on now, or look at the Discord site, or email me, Van Tharp, Position Size and Money Management Guru. I have a lot of crap on my computer. A lot of things I buy and I never use. But what I do use on a daily basis are TradeStation and Thinkorswim with my John Person, Dr. K, and Q add-ons. Genesis, I have it. If I'm going to be at home and trade futures, I like it. It's got some interesting scanning capabilities. At some point, I'll probably cancel it. On the stock market analytics side, Hgsi is my core product. EdgeRater supports it. And increasingly, I'm using more and more of Dr. K's tools, which are incorporated in TOS or TradeStation, and Cigar, who has both freestanding and add-on packages. For those that don't know Hgsi, here is the website, highgrowthstock.com. Again, I have no financial relationship. You hit free 30-day trial. You get 30 days of free use with data, no credit card required. If you take a trial and you're confused how to use it, if you email me, I'll send you some videos. Under investing strategies, you'll see a lot of videos that I've put out, and Ron Brown and others, how we trade the market, but how we use Hgsi to help us accelerate that. Stock patterns are cyclical. Last weekend, I really felt that this market was getting ready to roll over. And what happens? We get another leg up. And I think we had a little roll on Sunday night, but by the time futures open on Monday, we're strong again. It wasn't a rip-roaring week in the market, but it was a positive week. When I look at the charts, and we'll show you them in a second, we're getting close to the 200-day moving average on the S&P and the Dow. That may be the line in the sand that if we can break through that, we go higher. But I still think we're in this period of uncertainty, and that, yes, we keep going higher. Many of the pundits still say that's going to stop. I don't know. But I sure like to be in the rearview mirror and see the 200-day moving average on the S&P as support, not resistance. So I have a lot of positions, but I'm mixed. Still have a couple puts on, long puts where I'm protecting some of my positions. I bought a couple contra ETFs, closed them out quickly on Friday as the market was going up. Then I added some over the weekend coverage. Still overly long, but nimble if needed. Friday, strong day. Ian would call this a sea of green. It's hard to find areas of weakness. Maybe healthcare was weak comparatively, where it's got a lot of bit of red. I think utilities was the other one, but we'll come back to that one. Major markets. Let's take a look in Thinkorswim, which is one of my favorite platforms to use. And let's maximize and talk about the major indexes really quickly. So this is a year of the E-mini. What you can see, the S&P futures, you could see that the peak of the year was probably late February. It was February 20th. The bottom was probably March 23rd-ish, correct? Notice how I put in a doji here. Big move up day the following day, and we've been in, it's not a simple V-shaped recovery that went straight up, but it's still be in the V recovery world. The pundits expecting a retest or at least come back down somewhere in this range. I'll trade the market I have. I got a buy signal on the E-mini futures. I'm closed near the high of the day Friday. Here's the 200-day moving average. More to that as we go further. The NASDAQ. Notice the position related to the 200 on the E-minis. Let's look at the NASDAQ futures. They blew through the 200-day moving average a couple weeks ago. High of the day, high of the year, all-time high about the same time as the S&P. But boy, they've got a lot of moving average support underneath. They're not below the major averages. To me, that's much more bullish. It had a buy signal come in on Thursday, 2 days in a row, closing near their highs. How high can it go? Will it take out its prior highs? Yeah, it could. It could. We'll have to see how this opening the economy goes, I think. The Dow futures look a lot like the S&Ps. They're still ways below their 200-day moving average. Going sideways here, closed at the high of the day with a new buy signal. If I look at the Dow futures, the Russell futures, looks a lot like the Dow futures now, don't they? They're the ones that sold off the hardest. They hit their top of the year actually back in January, but their all-time high is much further to the left. Again, if I have to be bullish or bearish here, I'm going to say I'm bullish, closed near the high of the day with a new buy signal. The VIX is finally working its way down. It's still elevated compared to where it used to be. It is finally down below 30. Continue falling VIX from a high to low is a good time to be long in the stock market. And the dollar, which I've said has been sideways. I mean, you take away the spike up and the spike down, it's been in a gradual, maybe in a upward angle, but pretty sideways, in my opinion. Was weak on Friday. And I think that takes care of the daily chart. So if I really, you have to ask me, is this bullish or bearish? I think it's bullish, but I think we've got to worry or be wondering about the impact of the 200-day. Now, these are the futures. The S&P 500 may look a little differently. In fact, here's the cash market. It's a little different, not that much. A ways to go, but that's got to be where the decision point, I think, is going to be coming in. Now, I'll just look at the weekly on, I just ran Hgsi on the static charts here. So the weekly, you could see they've retaken their 200, except for the Russell. The S&P retook its 200-day moving average on Friday. Rates for the week ticked higher a bit, so that would be bad for bonds. AD lines have turned up on small stocks, big stocks. And if you look here, you can see in white the NYSE. And the only ETF that has turned down at all are the bonds, no surprise. And look at the relative strength here forming perhaps in small stocks. That would be great for the market and signal a risk-on phenomenon. Breadth, if you look at percent of stocks above the 200-day SMA, moved higher this week. And above the 40, getting close to overbought, although not overbought per se. And if I look at the 3-month or 12-week new high, new low, we are, again, at the high end of the range, not quite overbought, but getting there. Now, on the McClellan oscillator, we look for extreme readings. Don't have those this week. Divergence, not yet. Got to get a new high on price. And a zero-line reject. I talked about that last week. We pretty much had one where we rejected the pullback and the market bounced and went higher. If I look at the weekly, similar story. Not at an extreme. We were at extremes, and the market has rebounded since then. Current buckets for newbies. Imagine you could take every stock in the S&P 1500, stick their Bollinger Band on it, from the lower to the top, divide it into 10 deciles, put one below the Bollinger Bands and one above it, you've got 12 deciles. You put a midline moving average between the Bollinger Bands, and you ask how many stocks are above and how many stocks are below. On the right, we can see that 78% of the stocks in the S&P 1500 are above the midline of their Bollinger Band. That is bullish, but not excessively. You look and I see about 7% of the stocks are above the bands, 1% below. That is not a signal. This is a bullish picture, but not one of excess. We look for Hindenburg omens, and of course we won't see one until we get the next set of highs. What I did think was interesting is we are starting to see, especially on the NASDAQ, some new highs. You've got to see new highs eventually for this market rally to continue. The market, we look at the Woody indicator in the middle, is still very green, which is bullish. And finally, the excess volatility that we've been living in seems to be waning as that VIX has dropped. Defensive sectors have trailed, although the sectors overall are still strong. But utilities and I believe staples are the ones that are yellow. We'll come back to industry group rotation multiple times. Canaries in the coal mine, yes, I know it's booking. It's in the chart. I just didn't change the little thing here. Up 17% since the beginning of the year and appear to be on the way to newer highs. So the canaries, which are those big stocks, I've heard other acronyms for them. The big tech continues to lead. Now, I like looking at other ways of measuring the market. In EdgeRater, I took a snapshot of the market from the close on Friday the 1st, so that would have been Saturday's the 2nd, and I measured from Saturday to the close on Friday performance, and you could see what I love to see here, lower left to upper right, telling me that high growth stocks, high ERG stocks outperform low ERG stocks. And I always toss out the tail and the head because there's not a lot of stocks there, but clearly you've got that slope. You look at performance for earnings per share, it's kind of interesting. Lots of earnings and crappy earnings. Led relative strength. If you didn't have much relative strength, you did okay. There's a lot of reasons there. It could be IPOs, it could be stocks that are recovering. But I like to see high relative strength win, and group rank also seemed to matter this week, as did accumulation distribution. So this was a growth stock-led week when high ERG stocks are leading. Growth is doing better in the market. Now, I like to look at the boxes. I formed these boxes, and you'd have to go back months to see how I did this. I'll do this again at some point. These are boxes that I formed based upon what was perceived low of the markets on March 23rd, and then stepping forward, what is the performance in the market based upon the boxes. And the boxes are a 10 squares or 9 squares related to annual earnings growth and quarter-over-quarter earnings per share growth. The point is, these are something that Ian introduced to us 20 years ago plus, as off of a bottom, these stocks are typically the leaders. Well, off this bottom, the market has done amazing. The S&P's up nearly 31%. Of my 10 boxes, one box is the same as the S&P. Box 8 was up 72%. Box 4 is up 66%. 6, 56, and so on and so forth. So once again, although we're not done on this rally, the boxes, despite the fact that for the first number of weeks this was junk off the bottom, the boxes, which are high quality stocks with earnings, are leading this market charge. No new news in earnings. Let's take a look at this. Monday, nothing. Tuesday, core CPI. I don't think anybody will care. Wednesday, PPI. Again, no one will care. Thursday, we're going to start to look for, have we peaked in jobless claims? I don't know. I think the downturn in the economy may have peaked because we're starting to open up states. But I live in a state where all you see on the news are people that are crying because they can't get their benefits and they can't get into the system. Friday, we got a bunch of things here. Retail sales, everybody expects them to be in the garbage, so I don't think they'll matter. Industrial production, look at these expected numbers or previous numbers. Job openings, that'll be interesting. I think it's going to be a medium to low impact week on the news, mostly because of where we are in the cycle and things are baked in. It is not a low level week on earnings. And this has been crazy. One of my bigger positions was Alteryx, AYX. I made the mistake of holding it into earnings. It went from 122 down to 107, 108 in the aftermarket. It's at 130 the day after earnings now. Earnings were Thursday, it closed around 130. That's just the craziness of this market. People are being rewarded for less bad news than people expected. Those are tough to predict. And there are lots of stocks with earnings. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So what are my thoughts? Market continued a V-shaped recovery as prices seem to have disconnected from the economic and corporate realities. Small stocks strengthened again and lead on Friday as growth again, as I showed you, overtakes value in a risk-on environment. We continue to muddle through earnings season where the going message is a beat on a current, either revenue, EPS, or both. You talk down the next quarter and then announce you're not giving guidance because of lack of predictability. In good times, that message would be clobbered. In today's times, that's expected. COVID-19 remains an issue as clearly the population has had enough of sheltering in places and shutting the economy, and our states beginning to allow some relaxing of mandates. I'm so excited I'll get to go to the Apple Store and Best Buy starting Monday as we start to ease our restrictions down here. I'm tired of being cooped up. Now, that said, my wife has read me the Riot Act. I'm not sure she's going to let me out of the house still. Now we'll see if social distancing is maintained and whether or not we see another significant rise in infection. The market seems destined to test the overhead 200-day SMA on several indices. And I'll tell you, I do a large roll-up of lists on the weekend. And these are lists that have come from various publications, websites, various scans I have in TradeStation, Thinkorswim. And I had the largest list of bullish stocks that I've ever seen in a given weekend. Does that mean the market's topping, or is it just getting rolling? Let's take a look at the market from a top-down and a little bit of a bottoms-up perspective. I just want to do a call out to TH without necessarily sharing your name. He's one of our, TP. One of my followers who shared with me a presentation he put together, some scans, filters, TH, as I said, what am I thinking? Scans, views, etc., and showing how he does his top-down analysis. And my response to him was, good, now you can start doing some of my weekends. We shall see. All right. Let's see what we got here. Very quickly in TradeStation, only because of consistency, I like to look at where we are with my various indicators. So if I look at the E-mini here, we went to a daily buy on Thursday. We're in a weekly buy. We're still in a monthly sell. So that's got to be a little bit of caution that this is still a retracement in a longer term downtrend. That said, it's strong. We are up to 87% on the high jump, so that's not an issue here. I don't see any MACD divergence dots, which can last a while before you fall. The weekly bongo went green. That's a bullish assessment. The NASDAQ, same thing. The Dow futures went positive on Friday. And then the Russell futures, which have been the weakest, went on Friday as well. So I don't see anything here that makes me worried. Only thing that makes me worried is we've had big runs and we're getting near resistance, but play the market we got, not the one that any of us think we should have. So let's go into user groups, market analysis, user groups, major markets plus. Let's hit the warehouse view. And let's go into top-down view for stocks. All right, so stocks and futures, indexes, etc. We can see the strength. This view here really rewards 5-day performance, a little bit for 1-day performance on Monday, 5 days ago, and a little bit for 3 weeks ago. If we look at it, the strength was in NASDAQ, small caps, and Russells. No wonder I made a lot of money last weekend. That's my babies. That's where most of my growth stocks are. In fact, we'll look at the IBD ETFs as well. S&P 500 in the middle of the pack. Let's open up a daily. And then let's open up a weekly and let's see what we think about this. We all have our own way of doing things. This is what I do, and I like it when, like what TH did when he sent me what he did. If I look over at the right, I think last week I talked about, or was it one of the ones I did this week, that I sort of drew a line at the bottom of this hammer and the top of this shooting star and said, until proven otherwise, we're in this range. And a breakout above this range would be very bullish. A breakdown would be bearish. We are near the top of that range. We are also near this S&P 500, 200-day moving average. So if I want to be bullish, all right, and there's a lot of things on this chart for me to be bullish about. Let me show you why I might be bullish looking at this chart. Number one, we had a eureka. A eureka is an Hgsi signal, which is sort of our version of the O'Neill follow-through. That's big. Now, what is in a eureka? Let me show you. A eureka looks at things like advanced decline ratio, advanced decline volume ratio, and the ARMS index. And when it gets to extremes, it paints us a signal. And in a market that's just starting to move up, that is a very bullish signal. This will be the fourth eureka we've had, the third through the low in the market. Bullish. We're coming out of a MOBO breakout, a breakout here from a squeeze. Bullish. Our weekly bongo here just went positive. Bullish. A lot of things here get me excited. Now, off the bottom here to the close, we are up down here 33.3% with that work. And now what's bearish here? The bearish thing has got to be this, I would think, could be resistance, which is a 200-day moving average. We've come a long way. And you'll notice that even though we cut right through the 200 here, it did cause a bit of a reaction and sideways motion, and then we broke down. So the question will be, will we do the same thing, or will this be resistance? So I'm going to put a little box on here and say, in my opinion, this is similar to what I have on the other side. I have a box where the top of the box is where the 200-day moving average is. The bottom is about where the 50 is. We have three-road scenario. Road number one for the bulls is a breakout, retest, and on to higher highs. That is not out of the question. Every week that we have a bullish week, it's probably more in the question. We shouldn't forget that we could also break out of the box, retest, and go on to much lower lows. And as I said last week, that doesn't mean it's a straight line. It could be something like this. All right. Or are we going to dance in the box for a while, and are we going to be moving around, which I think is also possible. So that's my three roads. I'm sticking to them, and I'm going to look at what happens at the 200. Right now, let me clear my drawings. Right now, I think a retest of that is in the cards. And that right now, although it'll be less because it's coming, is only less than 3% away. Do you think that that's a natural? I do. And I do think that we should look in the past, and you could see how we got through it, but it took us several days here, and how it was support. We knifed through it, got back right away. Support. The breakdown here in 2019 in December, we failed at it, and then we broke through the second attempt. I don't expect a clean blow right through it. but a retest, a reaction here, maybe a little pullback, and then get through on the second or third time would not be out of the question. I don't think I need to spend as much time on the other indexes because at least several of them will look similar. Here is the Dow Jones Industrial Average. Further down in the pipe, lower in the box. We'll see, can it make its way up here? Time will tell. Again, the Eureka is on the NYSE or on the NASDAQ, so it will not change as I change charts. Also mobile breakout from a squeeze, and also the weekly bongo going green. The NASDAQ is the strongest of the bunch as it's above the 200. And look what happened here. It traded around it, actually knifed through it as a bear trap, and then went up. I wouldn't be surprised to see this kind of a reaction on the other indexes. This looks great. High jump is starting to get close, but it's not at the top. I still expect retest, but this is leading, which is why if you're a high growth stock investor, your portfolio should be looking pretty dapper right now. And the Russell 2000 is further down, but again, if you had to be bullish or bearish of that, mobile breakout, coming out of a squeeze, weekly bongos green, and Eureka, you got to be bullish. We'll see if that changes on Monday at 9:30. U.S. dollar. We talked about it being sideways. This is like the best proof. Not much change there. I think reality is the delta between the low on this date and the high here is so big it's going to compress the dollar now going forward until I get it off the chart. But a sideways move is a sideways move, and that's a sideways move. The VIX, we talked about it working its way down. It's still elevated from where resting is, but it's clearly on its way down. That would be a bearish stock pattern. I would not buy that stock. Gold has been strong. Sideways move on Friday, way up off the bottoms. It's got a daily bongo that's red. I think gold is in a resting phase. Gold miners have recently been outperforming gold. And you could see here, but they had a bit of a topping tail. Perhaps they're going to rest a while. And then if I go down to silver, silver is clearly weaker than gold. Perhaps it's at a better buy point. Mobile breakout out of a squeeze, kahunas, pocket pivots, John Person buy signal. That looks very interesting. And I think SLV actually made it on my buy list. Now, once I've gone through the major indexes, there's a few other things I like to see here. So let's look at the IBD index. This IBD ETF developed to mimic the IBD 50. It's managed. And again, for many of us, its holdings are reflective of what we own. And you could see it's been a tough time from the perspective of significant sell-off. There's been a nice recovery. We still are underneath the 200-day moving average. What's looked better has been the IBD breakout opportunities, which look a lot like the NASDAQ have broken out above their 200. I look at this series of indexes and I see nothing to take away my bullish case. My concern is that 200-day will likely cause a pause and could cause a reaction there, maybe a slight pullback. If I go down to 7, it's industry groups. You could see I have 176. One of them is just all industry, so that doesn't really count. 2-day force, it shows me that 108 are to the upside. Remember I said this was a very bullish week. And to the downside is one group, which is consumer electronics, which is because of Roku earnings. You can see a gap down and a finish down around the 200 with a topping tail. Other than that, everything looks very strong. So there's my industry group there. Let me get rid of it. All right. So, leading the charge, semiconductors. Do a right click. Oops, got to close the no. And you'll see a list of stocks. These are some great performing stocks. The problem with the leaders is sometimes they're not at good buy points. Let's go through a couple of them. NVIDIA, it's back, it's strong, it's in a straight line from where it started the year. You just have to ignore the top in February and the bottom in March. But what a beautiful performer. Any reason why it doesn't go higher? I don't know. It's got great earnings, big PE. Obviously, the market will influence whether it goes higher. A great performer. Would I buy it here? It's expensive. AMD, I own this one. I might even add to it right here. It's not really a cup and a handle, but it's a pullback in a super strong stock. Again, great earnings. Look at the demand on AMD. Infi, this was a buyable gap up. Well, this wasn't a buyable gap up. I don't know why. Maybe it didn't have the volume. Let's see. The volume on Friday was 7.9 million. I don't know why it's not a buyable gap up. I'd have to go back and look at the rules. Maybe the gap up wasn't enough. Hard for me to believe it. Big move on Friday. Great earnings per share growth. It's high multiple. I'd rather not buy something that's run that fast, but like NVIDIA, super strong. Micron, sitting at an interesting buy point, had a new person buy signal come in Friday. A mobile breakout from the squeeze right at the 200. Doesn't have the same oomph of growth rates as some of the others. Microchip underneath the 200. Qualcomm breaking out above the 200 with a new buy signal out of the squeeze. I like AMD the best, probably NVIDIA if I want to be chasing. On Semiconductor showed up again and again. Nice up move here. It's got to get above the 200. A new person buy signal did come in. So clearly there's a couple you could like right off the top. Biotech. So biotech, I love biotech. I love investing in biotech, but you have to understand the risk. Biotech has earnings. All right, everybody has earnings. Biotech earnings are probably, especially for the small startups, are less important because they don't make money. Biotech relies upon clinical trial results. You don't know when they're going to drop the results of a trial to a press conference. Biotech depends on FDA approvals and denials. An approval on a small stock often is an 80 to 200% gain. A denial is an 80% wipeout. So there's a lot of variables. So you have to be careful and know what you're doing. Now, in biotech today, there's other themes. There is COVID. This is Moderna. Moderna pre-COVID was a $20 stock. It is now nearly a $60 stock. It makes no money. It's being driven by the fact it's a COVID stock. You know what happens if COVID goes away tomorrow, which we don't expect. The stock will probably come down. Is it at an interesting buy point? It's got a person buy signal. It's breaking out to all-time highs. It's interesting. Not my kind of stock. No fundamentals. Totally tied to data, but the market certainly loves that right now. Now, Macrogenics is another story. Macrogenics has an interesting portfolio of immuno-oncology drugs. It has one that has a priority review that should be done in the next couple months. Likely will get approved in breast cancer, so that's kind of exciting. And then they released the data for ASCO, which is the meeting to take place at the end of May, the large cancer meeting, which will be virtual this year. And you could see the market went crazy on that day. Now, of course, it opened up high and moved up throughout the day. Is this one that you want to chase? I don't know. It's forming a flag. It may give me a buy point at a lower level. Portela, don't know much about it, but that pattern looks like they're getting bought. Pluristem, another COVID story. Big run up, doji, low close doji, and sell off. Now, sometimes these stocks will react like this, base and take off. That would be a little early. Again, does it have revenue earnings? No, it's under demand. What's the story? It's a COVID stock. And there's the index on biotech, which is usually as low as I go on this part of the show. E-commerce discretionary. Yeah, we're all sitting at home and ordering, apparently in China too. Alibaba, I love this pattern. It's a pullback to support. It just broke above the 50. It's right below the 17-day moving average. This here is a chandelier stop. That's a little far from here. I think you could be adding Alibaba into your portfolio now. I'd rather see it breaking out, but it would not be bad now. Wayfair, oh my God. Talk about, this is the ultimate COVID stock from a bad and then a good story. This stock was $170. It broke down with COVID early on because where does the manufacturing come from? China. It started recovering as our market was recovering rapidly as China went back to work. So Wayfair is expensive. It does have intermittently make money. It's expensive. Amazon, big jump up here prior to earnings, sell off on earnings. Now it's sitting right in the middle where it was the day before earnings. Hard to bet against Amazon. Will any improvement seen in coronavirus be a headwind? It could be, although I agree with most of the people that think it goes to 26 or 2,700. It is my largest position, so I'm talking my book. Mercado Libre, the eBay of South America. I missed this one totally. Bible gap up here. Big move up on Wednesday. Super strong. Chegg, another one, super strong. I don't get this one. I think it's textbooks online. And PIDD, this one is probably of the group, the one that I'd be most interested in looking strongly at. It broke out on Friday. Yes, it ran a lot. That's going to be the problem. It's going to be hard to get a stop that makes sense. All-time highs. I like PDD. I also like VIPs. Showed up on a number of my scans as well. Sitting right on the 50, had a big move. I think this is an optimal buy point here at free parking with a mobile breakout and a kahuna. Can't ignore the Eurekas, just telling you how strong that market is. Airlines, buy at your own risk. If they're not good enough for Jimmy for Buffett, why would we want them? They're cheap. I'm a business traveler. All right, I have 4.5 million miles on Delta. I have 2 million miles on American. I am perennially Delta Diamond. I haven't been on a plane since March 3rd. And we've been so successful with Zoom meetings, I'm not sure when I'll be on a plane the next time. Then think about your own personal family. Are you excited to get on a plane and fly to Europe for the holidays? I didn't think so. I don't know how long before these recover. I think right now it's about balance sheet and can they stay afloat till things ease up and we get a vaccine. If you got a really long-term holding, maybe. But I look across that as United, this is Delta, this is American. I don't know why you want to own these. I will say that they are under accumulation. And why are they here? They're here because, for example, American had 59 million shares traded on Friday. And Force, which is the divider here, takes into account volume. REITs. A couple of these looked interesting. Camping World. It's very possible that we're all going to buy Winnebagos and we're going to spend the rest of our lives vacationing with social distancing in a motorhome, seeing the wonderful sights of the U.S. So anything that has to do to support camping, whether it's places to park my car, buy a Winnebago, buy a tent, buy goods, may do well. Well, here's Camping World. It's a REIT. It has does not make money. It has a huge PE, pays a 4.5% dividend. It's under accumulation, and has dropped off some with COVID, but it's breaking out here with a mobile breakout. Weekly bond goes green. Camping World looks interesting. Lamar Advertising, think about it. I'm in my Winnebago. I'm traveling to Yellowstone. What am I going to see around the highway? Billboards. They do billboards. Good fundamentals, 5.7% dividend. Yeah, I'd rather buy it breaking out above the 200. I could buy it here. Veritas. What happens to COVID patients when they can't go home yet, like old people, like one of my friend's mothers? They go to rehab hospitals. So these are going to do well, especially for the first 28 days where they're covered by Medicare. Who knows if they can maintain their dividend of 10%, 10.5%. But this is a group that could be strong, not my favorite pattern. Americold broke above the 200, mobile breakout and a kahuna, pays a 2.3% dividend. Public storage, several of these looked interesting, good earnings per share growth, 4.2% dividend, but down in the pattern. Weyerhaeuser, they do trees, up off the bottoms, breaking above the 50-day moving average, pays a 6.9% dividend. Outfront Media, another one with billboard displays that I'll see when I'm driving to Yellowstone in my Winnebago. It'll be a nice Winnebago with a good surround sound audio system, a big TV, and high-speed internet with a satellite. But I could see that happening even with my princess of a wife. Outfront Media, 9.5%. So these are interesting. You want to protect you want to have some yield, buying stocks that are cheap, that look like they're recovering. This is one I'm not a big fan of, but I just am afraid of shopping centers. This is Kimco Realty Corporation, KIM, pays a 10.2% dividend. I just don't know. We're opening up our shopping centers Monday. The one by me with the Apple Store opens Friday. I'll be there Friday. Somehow I double ordered my new iPad, which, by the way, I love the new Magic Keyboard. So I'm going to return the second iPad and buy another Magic Keyboard for my first generation smaller iPad. I bought the bigger one here. Yes, I am excessive. Simon Property, bottom fishing on another shopping center. They'll find something to do with those big malls. We need more hospitals, maybe nursing homes. They'll find something to do. Application software and index. Twilio, well, I blew this one. Sometimes you want to be cute. And as it broke above the 200-day moving average here, I decided that it was unlikely to go below the 50, so I'm going to sell a shitload of puts, sorry for the French. And I did. I made money on the puts, and I could have bought the stock for 105 and made $70 in appreciation, but I made $2 on every one of my puts. So it was a safe play. I made money, but boy, I missed this opportunity. Boy, look at Twilio. I would be very careful of chasing it here, although I suspect $200 is not that far away. I do love Salesforce. I have a position in this one. My daughter works as a Salesforce administrator. It's really revolutionized her life. We use it in my office as well. All the bongos are green. It broke out here. Yes, it was a better buy on Monday than it is on this Monday. I think Salesforce is a leader going forward and goes higher. Slack broke out at prior highs. It's still not above its initial reaction high as an IPO. If you like this sort of thing, I have no issue with it. It did break out above its recent highs. Would not be a very, I like it. Workday is moving its way up, has to get above the 200. Here's one that I was looking at that I didn't buy, Everbridge. Sitting right here with a kahuna and a person buy and a breakout. Looks great, no dividend. I just don't like to chase. Glue Mobile has been around forever. It's reversed here in the past, but it's broken out as well. The one I have is C Limited, and these are stocks that to me has been a holding stock. It pulls back, but it keeps going higher, and I still like it, but I probably would rather be holding it than buying it right here. Back. Just drop down. We'll look at internet-related services. Those are obviously strong. Uber and Lyft. I don't own either of them. They're starting to see some business come in. A lot of positive things talked about on CNBC about them. They broke above their 200. They had a pocket pivot, Kahuna Mobile breakout from a squeeze on Thursday. If you like them, this isn't a bad time to buy them. They still don't make money. Lift further down in the pattern. Do I want to get into real estate now? Maybe. I'm hearing houses sales are still doing well. Rates are low. Zillow looks interesting down here. Here's that Alteryx that I mentioned. It was at 123 close on Wednesday. And I've got 100 puts. And I have a lot of them. That meant my puts were worth $23. It traded down here during the day at about 112. My puts became worth 12. But on the night before it opened, they were 108, so my puts were worth $8. It closed on Friday at the high of the day over 130. It had bad earnings. It missed its earnings per share guidance, and it gave us the story of we're withdrawing guidance for the rest of the year. Look at Amazon. It's back where it was trading before earnings, even though it popped the day before, and then after earnings it had a dump. Now it's back to where it started. This has been a weird earnings season. Exploration and production, it's junk off the bottom. Do you really believe oil is going to zero? These are compressed scales down here because of the big range. I own a couple of oil companies. The one I liked, if I had to buy one this week, was probably going to be Continental. I don't own this one currently. Why did I pick this one? It's moved above the moving averages. I see a lot of white space up here. This is the group strength. It's a big company with billions of dollars a quarter, under demand, small dividend. Not a growth stock, not buying it because it's a great pattern. It's looking at what's the best of the worst. I've been in Diamondback since the bottom. It's had a very nice move. You can buy a lot of options on a cheap stock, and I've had a nice reward on these. Anything else I want to look at? I don't know what's going on with coal, but a lot of the coal servicing stocks actually popped on my review as well. So as I do my analysis, I do what I just did, which is a top-down look at the top 10 industry groups, see if there's anything that looks interesting there. I do a couple of other things on the weekend. I will also go on the weekend. I will go into a different group. I'm going to call it my prospecting 500K and optionable. 1,624 stocks. And I'm going to go into one of the groups I built, which I haven't distributed unless you bought the person indicator because it's included within it. And I might look, are there any stocks that are in uptrend near free parking? Not very many. Let's look at, I'm not even sure I like any of these. Well, Alpha Pro Tech is another COVID stock. I don't like it. I mean, there's nothing going on with it. But to be in this list, you've got to be in an uptrend. You've got to be above the 200-day moving average. You have to be within 2% of your 50-day moving average. Let's see if any of these have momentum in it. Excuse me.
I know.
Do you have to do this while I'm doing a broadcast?
Yeah, I do.
Thank you for being, I guess it's Mother's Day, you can be a jerk.
I just wanted to show them, okay?
All right.
Relax.
So nothing really flipped out of that one. I might look at my uptrend near the 20-day SMA. A lot more there. There's Alibaba. Take a look and see if any of these look interesting. Sideways move. We talked about this might be interesting. ResMed, a ventilator potential replacement, but I think ventilators are less exciting now. We appear to have plenty of them. Taiwan Semiconductor. What I typically do is I take this list, I look for squeezes, of which I had 52, and then I look down my list and I go, all right, squeeze with any kind of momentum. I've got some with momentum, and let's just look at these. So we looked at ResMed. Mobile breakout from a squeeze. I just don't like the topping tail, so I probably wouldn't have looked at it further. Oracle breaking above the 200. This has been resistance for some time. It was running up before then. Tech Data, Campbell Soup. I actually own some Campbell Soup. And as boring as this chart is, I've actually made a few pennies on it. Mobile breakout from a squeeze and a kahuna. It's in a person buy. It's been in one from down here. And then the stocks that I don't understand, Domino Pizza's big lower left, upper right move. It's good to be into pizza, I guess. All right. I also have a number of other things that I do scan-wise. I might go down to my John Person scans. And this is just a buy sort, so all the stocks are here. But let's look at how many daily buys. I had 231 daily buys. And let's just cut to the chase. Let's look at the Trilogy buy, which is my favorite scan. And let's just go through a couple of these. Then I'm going to show you my buy watch list and maybe a couple other things before we're done. On semiconductor, I mentioned it early. To be in this list, you have to have a daily buy. You have to be in a weekly buy. You had to break out above your last conditional change and a few other things. This is a very strong looking pattern. Blooming Brands sitting here breaking above the 50. And I just go through these. Moderna here again. Here's Micron. Signet Jewelers, there was some takeover speculation. It's a mall jewelry store. I've actually made money on it around earnings a couple of times, and then it sold off hard. I'm not sure who'll be buying these things now. So I would go through this list, see if anything comes out. Here's an interesting one, NetEase. It's expensive stock. Mobile breakup from a squeeze, a kahuna, and a pocket pit, and a person buy signal breaking out here. There's a lot of good stocks in this market. That's all I could say. Now, I use other products. Show you a couple of things that I do. Go into Edge. So Q Edge is a tool by Cigar. He has an offer where his tools are all free now, but you have to buy through his website. You have to be a new user to his website and to Metastock. You need to buy a new subscription to Metastock. If you buy end of day data, you can get the Q Edge and Vital. And if you buy real time, he'll let you have Q Global and Finder as well. Also Index and Diary. So here I'm looking at Magenta, 1 day performance, 11 groups were up. Purple, 2 day performance, 11 and 0. And then Maroon, 5 day performance. So you could see the markets actually peaked 2 days ago, and then they gave up a little bit compared to the rest of the week. So they peaked, but the week itself was not as strong as it was 2 days ago. So that's pretty awesome. 1 day was still pretty good performance, but even what we have here over 5 days is strong. I look at a month, and I pretty much see, except for utilities, over the month, everything's up for a month in blue, 10 days in green, and maroon in 5 days. Strong markets. If I look at sectors, energy continues to lead. Energy really turned around about a month ago. Discretionary, which was also weak, has moved up to the top. Materials, industrials, and so on and so forth. If I want to look at move on Fridays by sector, see 6.92% in energy, 5.77 discretionary. I've got energy, so I'm kind of interested in that discretionary. So if I click the gears, I should open up the different groups in consumer discretionary. Here they are. Now, if I want to look at what's been leading over the last 2 days. So what I have here is apparel comes right to the top. It's got 128 blue group strength, so that's pretty strong across everything. Within this group, leisure facilities, computer retail, tires, there's a lot of things that are stronger, autos. But I noticed when I looked at my large list of stocks, there are quite a few of apparel retail. So I'm interested in apparel retail. I'm going to hit these gears here. and it's going to bring me down a list of stocks. I'm going to pause it for a second because I want to clean off Vital. That's all right. So back to Edge. If I hit the star, it'll bring up the best stocks in the group from a valuation. This doesn't mean fundamental valuation. It's really looking at growth rates, price, multiples, etc. And what I see is Genesco has 100 primary, 91. I like that. That's an interesting valuation. I'm going to go over here and I'm going to grab Genesco. I'm going to copy it. I'm now going to go to Vital. And I'm going to type it into the root or paste it into the root stock. Now Vital is going to do some calculations. It's going to pull its peers, so the other stocks in the group. It tells me it's apparel retail, consumer discretionary, 1862, average volume, alpha, beta, things that I don't pay much attention to. It's 65% below its 52-week high, but it's quite a bit above its low. Here's its change over the last day, since 0 is usually the current trading day and 1 is yesterday. Since we're not in the market today, they're the same. I look down here, I want to see blue here, valuation secondary. And with a 96 under short squeeze, it says that the squeeze potential is high. This is not the John Carter Bollinger Band squeeze. This is a scenario where there might be a lot of shorts in the market, and there might be risk of them having to cover. Let's go hit the peer analysis. Here is a number of their peers. Not all these are in Edge. You'll have more here typically. And again, let's do the star. I guess I thought there was a star on this one. He moves things around sometimes on me. Oh. All right. No star. Ah. Hello. My star is back. I was too far to the right. And again, these are the leaders. You look at this one, it's got great EPS year over year, last quarter, 2 quarters ago. I like this fundamentally. Let's look at it within. So this is a stock that went from a downtrend to an uptrend on the weekly. It had a Kelly major cycle low. It has a buy signal on the weekly that came in 2 days ago. Or 2 weeks ago, it has a new buy signal here. A lot of areas of resistance here, but I'm going to watch this because a breakout above this area, it has a long ways to run. So I'm going to look closely at Genesco. That's how I use top-down analysis using Cigars tools. Now, Cigars tools also have a number of scans, radar screens. So let me go back here and let me open up my buy watch list. I use this tools in a lot of other ways too. Just want to be clear on that. And I'm sorry, I got mad at my wife, but she came in here FaceTiming my dog to my son who lives in Taiwan, who must have called her to wish her happy Mother's Day. Uh-oh. Well, that's because they're not trilogy buys. I'm going, where's my stocks? I just did a cardinal sin, my friends. I'm looking at last week's stocks buy list. Let me pull in this week's. I have a lot of computers. So what I do is I export things. I have to hold on 1 second. Let me export it and bring it over. All right, I just saved it on my other machine. Let's import it. I got a couple of things I want to show you here. So I mentioned that there was a lot of nice looking stocks. I don't normally have a buy watch list that has 56 stocks. So I haven't finished my workup yet. But let's look at if there's any industry groups that stand out. A lot of those REITs I showed you. Here you go, folks. Here's Winnebago. When have you ever seen me talk about Winnebago? I'm not kidding. I mean, if you don't go flying, if you're not going to go to Europe, if you're not going to go on a cruise ship, you still got to go on vacation. And what's the best way to social distance on a vacation? A Winnebago. I'm sure I'm not the only one who thinks that way. Look at how it started moving. El Dorado Resorts. I've been in this one for about 10 days. It's interesting. It doesn't look like much right there. Okay, so El Dorado Gold, this looks like an interesting buy point. They passed some rules in Vegas about what it takes to open, and they're talking about opening at the end of May. Wynn and Las Vegas are here. Las Vegas, Wynn had a nice move, a little bit more pronounced, but it's a bigger dollar value. Las Vegas Sands also had a bit of a move as well. So I thought these were interesting. Las Vegas Sand, perhaps the most interesting. What else did I like? From a biotech perspective, Arcus Biosciences, flag, breakout of a flag here. There's discussions here about potential takeovers by Gilead. That's why it ran up the first time. A lot of the stocks I've already shown you are listed here. I really like Meredith. This is one that Sagar called out over the weekend. Why? Here's your double bottom here. Look at your PMC strength. A new person buy signal, a mobile breakout from a squeeze, and a kahuna. The dividend yield is crazy, can't be maintained. Earnings are supposed to be Friday. I don't think they came out yet. And let's just take a look here. MDP rather. Broke out through resistance here. That's a breakout here. Weekly is in an uptrend. Here's your Kelly low. I like this one here a lot. The challenge is going to be when are the earnings? You see these red little green dots on the daily or weekly, rather, that's a MACD divergence building up. All right. What else do I like? Kimura's company. New weekly buy signal. Many of these we've looked at before. Just see if there's anything I want to show you before I say goodbye. Oh, they don't have purple in this one. Ruckus. AAXN is gapped up. I told you in MDD. Middleby Corporation. I mean, this is the pattern out there. Stocks that were beaten up that are starting to move, that have not moved so much that they're too expensive. Makes money, not a whole lot of growth, 2.8% under accumulation. Let's look at it here. You can see a weekly buy signal, daily buy signal 2 days ago, just broke out above a resistance. Look at the strength of the PMC. Recent major Kelly low. If I look over here, broke above resistance. It's got to get above this. I guess the earnings just came out. New person buy signal on the weekly. Lots of volume Thursday going into Friday. I think that looks like an interesting stock. And then the other one that I had circled here, RVLV. Let's look at that. Here's one that is an IPO, trashed, mobile breakout from a squeeze, a break above the 50, a new person buy signal, and a kahuna. Look at how PMC has been going up despite the stock really going nowhere. Let's take a look at it here. Not there. PMC, strong, coming out of a squeeze. New person buy signal. The other thing I liked about this is the Laguerre RSI, which is one of the Dr. K tools. And then just to finish with some of the Dr. K stuff, to show you what I use, I've built some screens with Dr. K, looking at seasonality, 20, 40, 60. These are some of the stocks that will have seasonality. This is the percentage return. I expect them to have. Beat is one that's got good seasonality here. You could see the 5-year line in yellow, the 10-year line in red being almost the same. Really strong seasonality from here. So I'm able to scan for both bullish and bearish seasonality. I will tell you that this is not the time of seasonality in the market. And on that note, I'm going to say goodbye and go talk to my partner.